Hello, welcome to another trade recap, or I should say trades recap, because I took 6 trades this day. So these trades were taken on Friday, May 15th. Let's go to the chart straight up because it's going to be a long video. Now on the higher time frame, obviously we are at all-time highs, but on that particular day I was bearish. Why? We created this 4-hour bearish gap and another 4-hour bearish gap, plus we had these equal lows. The previous day low plus Asia low, and this low I haven't marked it on the 4-hour, but this is the New York AM low, and this has a very big role in that day's trading. Now going into the 15-minute, so this is the 2-day opening, and we had London highs above, but obviously I told you I was gonna target this New York AM lows after the market goes up and manipulates into these overlapping gaps. Now don't get intimidated by these different colored gaps. These are just gaps from different time frames. This green gap is from the 4-hour time frame. The blue one is from the 1-hour time frame. This purple one is from the 15-minute. So what I was expecting at market open, this is the market open, this vertical line right here, 9:30 open. I was expecting the market to go a bit higher, manipulate into one of these 30-minute, 1-hour or 15-minute gaps, and then show displacement towards the downside. So I can target this New York AM low. And let me go down to the lower time frame. Now, as we see that the market opens right here, it creates this volume imbalance and goes up into this 30-minute bearish gap, taps into it, and then shows a displacement towards the downside. And this is where I enter a trade. Now, I'll go through each of these trades one by one. So let me just go towards the first trade that I took. That was according to my system that I was talking about. So it goes into this 30-minute and then it shows displacement towards the downside, and this is where I entered, where there is a change of state of delivery. This gap, 1-minute gap, gets inverse. I enter a trade, stop loss just above this high and targeting this black line, which is the New York AM lows. And this trade goes up a bit, but then eventually starts dumping towards my take profit. Right here I'm in a good profit, but I didn't close my trade. I break even my trade after this low was taken, but I did not close because my draw on liquidity was obvious, and I knew that I was confident that this draw on liquidity had to be taken. And this draw on liquidity on US 100 was closer, so I was expecting US 100 to take this draw on liquidity before S&P 500. But what happens? The market immediately shows a reaction from this zone and hits my break even. Now at that point, I told you I was in good profit, but as soon as this 3 candles take me to break even, my psychology gets a bit hurt. And look at what I did next. So my second trade was the worst trade I have taken in a very, very long time. As you can see, this up move that got me break even, it has this bearish, bullish gap. And this first bearish candle comes down, and as soon as this second bearish candle was formed, I was like, now the market has to go downwards this, and I take a trade, and I got immediately stopped out. As I told you, this is the worst trade ever because this gap was created. I should have waited for this to be inversed at least, and as expected, I got SL'd. So the first trade was break even. It was a systematic A+ trade. I should have stopped trading after that, but I took an unnecessary loss here. Then after that, what happens is the market goes up and it creates this equal highs with this 9:30 AM high. It creates equal highs right here. And then it shows good displacement towards the downside. Now here I enter a trade again. Now this trade is debatable. This is not an A+ trade. Why? Because we just created equal highs with the 9:30 AM. This is a very important zone or a very important high, and we just created equal highs with it. So this is not an A+ trade, but at the same time, it's not a very bad trade. Why? Because we also have equal lows, almost equal lows at this 9:30 AM low. So this trade was debatable. However, it was not as unnecessary as this trade. But the result was same. I got stopped out again. This is where I realized that the draw on liquidity was definitely these highs, these equal highs. So I entered a bullish trade with my stop loss just below this order block, you can call it. And I was just targeting a few pips, or you can say handles above this zone, because I knew when it is going to break this zone, it is going to go a bit higher before coming down, and yes, it did. This was the first win. I was not happy for this win because I already took some unnecessary losses, but this is where I should have stopped. But as I told you, I was so fixated on this drawn liquidity to the downside that I took another trade after some time. Now let me go into the 5 minute, and as this 5 minute bullish gap was created, the market was coming down and testing it again and again, and I was like, this has to be inversed because it's getting weak. As it's getting tested again and again, this has to go weak, so I should enter a trade and target my New York AM lows. And guess what I did? I entered a fifth time here with my stop loss just above here, and obviously this was on the charts that I was gonna get stopped out. Got stopped out, and I did not stop here. I traded again. Market showed a good displacement towards the downside again into this 5 minute bullish gap, and I was again, as I told you, I was so fixated on the stone liquidity that I entered again, and short story is that I got stopped out again. Now let me tell you, this is not how you should trade. Why this happened to me? Because let me show you my weekly results. So the previous week I only took one trade. I was up 66, and then I made 77 on Monday, just a $8 loss on Tuesday, then 36 on Wednesday, then 95 on Thursday. So I was very much confident because I was winning consistently. So I was very overconfident. So I was in my mind, how can I lose? How can my drawn liquidity not be targeted? This is why I took unnecessary losses. This first trade was fine. This was a very good trade. I should have accepted that break even and should have stepped away from the market. Or I should have targeted these equal highs, which I did, and made some profit. But this was just one winning trade. I lost 2 unnecessary trades. And after that, another 2 unnecessary trades targeting this drawn liquidity. Now you might have that question in mind that I took 4 losses and only won a single trade. Then how am I only in an $80 loss? Because I managed my trades well. My risk management was there. Although I was over trading and revenge trading, but my risk management was there. I was well aware that these trades were not good, and I managed my risk well. This is why my loss on Friday was still lower than my profit on the previous day, on Thursday, as you can see right here. So this is what tells you the power of risk management. I took 4 losses, but I'm still not very much in a drawdown. So this was it. I wanted to show you how one bad day can affect you and how you should not fixate yourself and how you should move away from the markets. This doesn't happens to me very often. I'm very professional in my trading. I usually step away, but I told you I was so overconfident and so fixated that this has happened. And after that, I'm recapping these trades. I'm like, why did I do it? And I'm confident that these trades and recapping all of this will surely help me avoiding these trades next time. I wanted to show you this, being transparent, and let me show you the proof of these trades. This is, let me go on to the 5 minute. These are the trades that I took.